Center stage. I'd also request Mr. Shomojit Ghosh, founder Wealth App Distributors, to come and join us, and Mr. Arindam Mitra, regional head, Samco Mutual Fund. Gentlemen, please be seated. Request you to kindly take your cell phones out if you are on an important call. Please be seated and let's start the session. Over to you, Mr. Pal Chaudhary.
Thank you. Thank you, Shayantan. I remember our corporate days for all the training programs after lunch sessions were called graveyard sessions because everybody used to fall off to sleep. And that is the reason I think ICC has saved the best speaker of the day for the last session because I mean, as you always see that in the musical concert, the biggest star will come at the end. So today our panel topic. May I request audience to kindly settle down. So our topic of today's panel is bridging access and building trust, expanding mutual fund reach in India. While we have been talking about growth and we heard a lot of numbers, 20 times we have grown, etc., from 2005 to 2025. But having said that, mutual fund today manage over 55 lakh crore in AUM, but nearly 80% of that come from the top 30 cities. That leaves a massive opportunity and responsibility as well to bridge the gap in India's mutual fund inclusion story. Today, I have the privilege of two of the esteemed speakers, and I would take the responsibility of introducing them because the gentleman on my right is one of my best friend, my partner. When my son heard that I would be moderating the panel and he would be participating, he said that name of the panel should be Karthik calling Karthik. So we go a long way. For last 25 years, an accomplished banker. Mr. Ghosh has done his MBA in finance and marketing. He used to head investments for different multinational banks. And for last 10 years, he has been one of the most successful entrepreneurs and more importantly, one of the best brain mutual fund industry would have produced based out of Kolkata, Mr. Shomojit Ghosh. May I request all of you to put your hands together for Mr. Ghosh. And on my left, Arindam Mitra, he has very kindly agreed to join and he claims to be very nervous because he and Shomo is sitting in the same panel. He said, how can I sit with the stalwart? And I said, that should be the variety of the panel. So Arindam also, I know him over 2 decades. We have been colleagues. All three have been actually colleagues. Arindam has worked with HSBC, Standard Chartered, and Arindam has also worked with a couple of mutual funds. And currently he is the regional head east for Samco Mutual Fund. So a round of applause for Arindam also. So I'll come to the first topic, bridging gap in mutual fund access. So Shomo, from a regulatory standpoint, how is SEBI or AMFI addressing these barriers? And is there a movement or incentivizing regional penetration or easing distributor onboarding?
Thank you, Anindo. So post-lunch session. So let me try to make it a little exciting and participative as well. So while SEBI has taken several steps over the last 10-15 years, including the B30 initiative, however, there are many gaps in, I think, the way a mutual fund has penetrated beyond top 30 cities. As Anindo was mentioning some numbers, but I think there are enough and more gaps. When, as for someone who has spent almost 29 years in the mutual fund industry, literally, I had the privilege of seeing some of the best brands which are here, right from Birla to ICICI Prudential to HDFC. Literally, their first schemes were sold by me. When I see that last 30 years journey, and when I see that the mutual fund industry has just barely managing 5 crore investors, and Dream 11 has 22 crore users, you know, that's the kind of, I think, I have some of my friends seated here. They are also in the same mutual fund industry. I think most of you will echo my thoughts that while we are talking about growth, but in a country like India with 50 crore PAN card holders, 5 crore mutual fund investors is like, I think it's a failure as far as penetration is concerned. Now, is there a magic wand by which this 5 crore can become 10 crores or 20 crores? I think the magic wand is in the hand of 30 lakh life insurance agents of India. That's the magic wand. Because if you think that, you know, you will do mutual fund Sahi Hai campaign, and one of my friends, and I was very happy to hear you, and I was clapping away to glory when you were saying this, because I agree with what you are saying. 10 years and some 700 crores or plus going down mutual fund Sahi Hai has not improved the number of customers. I think what has happened to the mutual fund industry would have happened without any campaign. 2 करोड़ को अगर 4 करोड़ बनना है 10 साल में इन इंडिया, वो तो कुछ ना करके भी बन सकता है. Okay, so I think if the mutual fund industry really has to penetrate beyond top 30 cities, there are two magic wands. One I will say now, the other I will wait for some time. Maybe Arindam will enlighten me and take cue on this. But the magic wand for me is how does this industry encourage 15 lakh life insurance agents and 15 more lakhs other agents of different other life companies to sell mutual funds, because today, as I speak, not even 10% of them are selling mutual funds. I think that's where the magic wand lies. As far as enhanced trail and all that are too little incentives for B30 kind of cities to come and change this number. And if we are happy that, okay, we have 4 crore, tomorrow we'll have 5 crores, and we'll say we have grown 20% in 2 years, then let us be happy. No problem. It's also a growth. But I think if we want to aspire as an industry to move from 5 to 20, I think we have to ensure that the current mass of fantastic life insurance agents, I think staggering numbers they collect every year, and give it to them. The insurance industry gives a 6% return, and they collect premiums which I think mutual fund industry can't even think of. You can do Google and you can see those numbers. But I'm just saying that industry is doing very well. Some of the mutual fund distributors are also life insurance agents. Some of us are not. But I think at times I feel that the kind of good work, the kind of great penetration which is happening on the life side of the country, if mutual funds could have done even 10% of it, it would have been great for us.
Thank you, Shomo. I think for a change, our esteemed speaker, has been very candid. You know, he hasn't gone into any wishy-washy answer, but a very clear directive response that life insurance agents can add a lot of value to the growth. So I'll move to Arindam now. Arindam, from your experience, what are the key logistical and distribution challenge AMCs face in expanding tier 2, tier 3 town? And what innovation or boots on ground strategies are showing promise?
Uh, Hello. First of all, thank you. And I'm very obliged to be with two of the stalwarts of the industry. They have been my mentors throughout my life. So first of all, thank you for that. And coming to the questions, the first is the distribution network. So the distribution network, as Shomajit does said, is concentrated mainly into this 30 main cities where 85% of our AUM is coming from. The 15% come from the rest of the country, where we call it the tier 2 and tier 3. I think in previous panelists, I think they have also mentioned that is where 65% of our population stays. So that gives us a huge amount of understanding that where is the gap. 65% of the population is still contributing 50% into the AMC, with, of course, म्यूचुअल फंड सही है all going all around. Yes, सही तो है, but इसके बाद क्या? इसके बाद the next thing which comes as a challenge for us is the understanding of mutual funds in the rural areas. See, rural areas, I think some people just before the lunch, the gentleman who gave a presentation also said, my father still invests in a chit fund. So that has also been a positive and negative for this crowd, because a lot of people we know itself in whatever in this eastern region has happened with the chit funds, and that has shaken the confidence of the investors in the rural belt. The major challenge is that next understanding of an investment as a mutual fund is also a issue. So these are the issues: distribution, understanding, and also trust, which is lacking in trust in the financial markets. Specifically, everything is seems to be stock, which is very volatile. If you put in money, you lose it or you gain it. So it's a gamble. And let's put it into the post office and banks, which are the safest ones. Yes. Coming to the next point, that how we are addressing it. Of course, addressing can be done with the people in the rural areas usually believe on people or institutions to do their investment. So post office, LIC agents, as Shomajit said, that LIC agents are one of the pillars. Banks is another. A lot of PSU banks are another pillars, and local investment advisors are another pillars. They are also advising in other things. So they are also one of the other pillars. We are trying to address this by educating them, tying up with each of them, and garnering a sense of confidence on the product, a goal-based approach, and also not on the return-based approach, because everybody feels that if we are investing in a mutual fund, we should have first return. So that needs to be changed. And that mile has to be changed with the contribution of all three. Yes, AI will be one of the factors, but some of the regions in the rural areas don't have correct connectivity. How will AI reach there? So if I have a phone that works on a 2G, AI will not function at that point of time. We will obviously reach to that point, but it will not function. So these connectivity in the local levels will obviously increase the awareness, and where we can obviously move ahead.
So taking a cue from Arindam, just to share some data that only 17% of the new mutual fund folios last year came from beyond top 30 cities. So clearly digital is not alone a silver bullet. So Shomo, my question, moving to the, beyond 30 cities, do you think that the vernacular approach would encourage people or the sellers there to mobilize more business?
Yeah, certainly it will. There's no doubt. But let's understand. Okay. Uh, okay. Is mutual fund a short-term product or a long-term product? Long-term product. So how do you define a long-term product? People should invest there for long-term, correct? And in the long term, what that product should do? It should meet a goal, correct? The goal-based. So what are the primary goals of people's lives? Children's education, Retirement? Okay. Huh? Stay well, yes, but long-term goal, if you see, if you ask most of the Indians, their primary goal is children's higher education or marriage, and then their own retirement once the children's education is taken care of. Correct. Now, can anyone here tell me that out of this 55 lakh crore that we are talking about, how much percentage of this is into children plans or retirement plans of mutual funds? These are all solution long-term products. How much percentage of this 55 lakh crore is in solution products like retirement and children products? Can anyone please help me? 5%, okay. Anyone else? Who is this person? Please stand up and clap for yourself. Thank you very much. Thank you. You know, just about out of 45 odd mutual funds, just about 5 mutual funds or 6, 7 mutual funds have a children product. The others don't have children products. They talk about solution, they talk about meeting goals. Now, what are we talking about as an industry? Our average duration of a fund's investment is around 1 year, right? After 1 year, you get tax advantage. Tax is the only thing basis which we sell. And our average duration of a client is some 11 months. Okay? And in bad market, it reduces to 7 months. That's the industry we have created, guys. Right? Now, the point is, you know, if you want to, take this forward, you know, what are the things that, again, I'm coming back to that again, fulcrum, that will change it big time. Now, what will really change it big time is come and tell me, I'm a distributor of mutual funds, that if your client stays in a fund for 10 years, I'll give you 10 paisa more. Will it help? So say, for example, my client is here to stay for 10 years. But am I getting incentives because of that? No. My trail will actually go down if my client stays for 10 years. Some of the mutual funds will come and cut my long-term trails. So I'm just telling a simple thing, and I'm asking some of my fellow MFD distributors. If you are given a solution by SEBI or AMFI that if a client invests and from day one says, I want to be locked in for 10 years, you will get 10 paisa more and the client's return will also be 55 basis points more. Will it be better for you to sell? Yes? Right? Now, right? Now, nobody is thinking about it. Nobody wants to give us 10 paisa more. For ticking the client on day one, that I'm telling you, this is long term and you will stay for long term, 10% tick 10 years. And I'll get 10 paisa more trail. Unfortunately, nobody is thinking about it. Everybody is thinking of how to reduce my trail by 10 paisa. All right? Now, given this situation, whether I communicate that in Bengali or Hindi or Sanskrit, I don't know whether it will make much of a difference. Dream 11, by the way, again, my favorite go-to place right now, 22 crore users. They are communicating in just Hindi and English and they're doing quite well by now. Isn't it?
True. Got it. Shomu actually moved to our next topic, that is promoting mutual fund as a long-term solution. So Arindam, my question to you, short-term speculations remains a behavioral hurdle. Okay, how according to you, the AMC industry is working to nudge investors, especially in smaller towns, towards long-term goal-based investing?
See, it is still a misnomer in the smaller towns as their knowledge about the mutual fund is pretty less. Most of the people thinks that it's a money-making tool, and that's why I think Dream 11 is one of the popular platforms which they are very much attached to rather than the mutual fund platforms. And also they feel that we should track their returns and not our goal. So goal based investment, which is just reiterated in the same idea, is not being promoted in the rural one. Or we are basically saying you invest in this, you will get a return on that. And that is the basic dialogue which happens. What is your portfolio return? What is your SIP return? What is your mutual fund return? So we are actually chasing returns. So the basic ideology on educating IFAs and also IFAs who will be speaking with these sort of crowds needs to change, and we are trying to also change from a return based to a goal based approach, where it says that are you in track, rather than every month tracking my return. I will track whether I am in my goal for my child's education, for my retirement. Is that goal getting detracked or it is in track? That sort of an approach is one of that. Secondly, also communicating through, as I said, reiterated, that people in the community, in the villages or in the rural areas are very much looked after. And whatever they advise, they hear from them. And I think a lot of the LIC agents are also our IFA fraternity people are also looked in that way. Communicating through them also should address to them, because how much you give, we understand that every time we are going into this Dream 11, because it instantly gives you a hit out there. For, as Shomojitda say, it's a long-term thing. It's a long-term. Who is telling it is long-term? The 10 years incentive, and it is long. What is long-term? We cannot decipher. For me, long term is 10 years. For somebody, it is 25 years. But my children's education is not 25 years. I cannot set it. It is after 10 years or 15 years. It will get shorter. So let's link with long term with goals very personal to me or too personal to heart. That is one training which needs to shift, and we are trying to do that. Secondly, tying up with rural banks. They have a very good attachment towards that. And also with IFAs, which we are trying to attach and promote mutual fund in that way, that it reaches the crowd and people participates on this, other than the commission part and all, which Shomodha Jidda just said. These are certain steps which we are focused on to promote mutual fund into the rural belt. Yes, enablers like AI will obviously, vernacular is something, because rural belt, most of the people obviously don't get English. All of them don't. So vernacular is one of the things which is being promoted now in most of the states, which they understand in the very rural sectors. So that is one of the things. So this has to be vernacular. This has to be reiterated with very personal goals, and this has to be communicated from trust related sources, because trust is a huge problem in the rural area. They don't trust too many people, because they have been have been cheated so many times in investing, showing them those returns, because these were return oriented investments. So of course, getting 20%, getting 25%, getting 15%, that was the goal. That's not the goal. The goal needs to change. It is your retirement, it's your child's education. That's the goal, not the return. So that's the change of shift we're trying to make. And I think that will add to a lot of value in buying for mutual funds going forward.
Thank you. Yeah, indeed. I mean, trust is definitely a genuine factor. I mean, we in West Bengal, we have been through so many scams, especially in terms of money mobilization. I'll not name to avoid controversy, but yes, definitely that's a very important point. Shomo, I had two questions for you. You have already answered what is SEBI AMFI doing to reinforce mutual fund as a long-term investment vehicle. That you have already answered. So my question to you, something which is very close to your heart, what is a regulatory narrative moving from product selling to wealth planning?
Yeah, this is again, I think the regulators have tried to change of late, that they have tried to rename a mutual fund distributor from just an person who distributes mutual funds to some kind of an incidental advisor, which is good. I think it is also important that as Arindam was mentioning, very, very good point. In the rural areas, in B30 kind of places, banks play a very, very important role of conveying that trust. Because for over the years, people walk up to them for small loans, people walk up to them for with their little deposits, and bankers really have still play a very important role in the lives of tier 2, tier 3 cities. But till such time, the mutual fund industry just focuses on trail income, and where as a distributor, your income really stacks up after 5 or 10 years. Banks will never be that keen to promote mutual funds as their primary product, cross-sell product, and year after year. And this is something that as my banking days also I've seen, and over the last 20 years it has not changed, that banks will generally sell insurance policies in the ambit of mutual fund or in the ambit of investment products, because those products give them an instant gratification, give them a higher commission. So if the regulator 10 years back had decided that, okay, let's make everything trail, and the world will be equal to Ma Ganga, then it's fine. It's a great decision. But the point is, after 10 years, is there an opportunity to give solution funds, funds like retirement, funds like children's education, some upfront commission to the distributors? Why not? These are 10-year plans, right? So if you are locking a guy for 10 years, why not give a distributor 10% upfront commission and then start the trail from the 11th year? What's the problem in just thinking about it? Just because some regulator some 11 years back woke up and said, no upfront, everything would be trail and everything will be as clean as Ma Ganga, is there a time to rethink that narrative? And I think just to think about it, I believe that it will make a big difference in the lives of those 30 lakh agents and those rural banks when they would promote a children's plan of a mutual fund and they can book at least 10% upfront income, or a kids education plan and book 10% upfront income. And that 10% is nothing, because if the product has a 1.5% trail or expense ratio over 10 years, a mutual fund will automatically make 25 to 30% absolute money over 10 years. So paying 10% upfront will not make any mathematical problem. And from the 11th year, pay a 1% trail to the distributor as a continuous income for having sold a right product to a client. So I think some little changes or little brainstorming needs to be done, because otherwise, I think as a country, 5 to 15, 20 crores is a very distant dream.
Thank you. I think one good aspect is that SIP is always a long-term investment process, and currently the SIP AUM consists of 10 lakh crore out of the overall mutual fund corpus. So that is one very encouraging number for the long-term story. So moving to our third topic is leveraging existing ecosystem. So Arindam, banks, NBFCs, IFAs or MFDs, whatever, there is a huge distribution base already. How can a mutual fund house partner better with this ecosystem to deepen presence in the under-penetrated areas?
So as I said, banks are one of the pillars of obviously penetrating into these areas, because they're a hub for basically the belief and the trust which comes from there. Tying up with banks, distribution through recurring deposits and savings accounts are anyhow being promoted by PSUs as well as private banks in every rural area. With that, goal-based SIPs, whether in equity space, if people are not comfortable, they can also go for a passive fund, which they can start with, and maybe a debt also, to just inculcate the habit. That is one of the things. For NBFCs, yes, they also have digital platforms, which has to be a little light. They have to be also working into low connectivity mode, because in the rural areas we don't get 5G, and I don't think we cover whole of India with 5G network as of now. So that will not work to that extent. So those sort of platform which are light as an app which works out there, and obviously that needs to be guided, because I do understand if that can be one or two, developing that sort of ecosystem. And thirdly, the IFAs or the MFDs, they are the last mile, because you go and teach somebody, and as I said, at a goal based, uh, like you have to have that. Uh, Usually we do promotions on loan, SIP melas, SIP drives. All these are something which are linked to banks as well as NBFCs and also the MFDs. So these inculcate one of the habits everywhere where there is a mela, everybody comes into. Why not put 2 3 stalls out there and also give some goodies, and with that an SIP calculator or an SIP something in the vernacular language, because half of the things will not understand the SIP calculator as we show the multiplication effect of 10 to 12% over a period of time into one or whatever 10 lakhs or 20 lakhs or 1 crore. So that fictitious figure will also fear them that I don't have 500 rupees to eat and there I have a calculator of 1 crore. Yes, it's a big dream, but the dream, all dreams, as I said, being in the rural area, they are also pretty much not very sure these dreams are being showed before, and they have been completely looted also. So obviously that needs to be inculcated by our IFA fraternity, and I think which they are doing also. These are the three modes we usually take to popularize SIP and bridge that gap between that fear, trust, and the acceptability of SIP as a product in their normal investment basket.
Wonderful. Very good point, Shomo. Uh, how can financial inclusion infrastructure already laid down, like common service centers and the banking correspondence, be aligned with mutual fund penetration?
There is again some great work happening there, and technology is helping in a great way, in a big way. I have just one question. The government talks about 50 crore accounts got opened under the Jan Dhan account post 2014, correct? Now, obviously, there were a lot of KYC issues before that. I'm sure these 50 crore accounts were opened by taking Aadhaar and all that. So why can't these accounts invest in mutual funds without a KYC? Because money will be going out of a bank account and will come back to the bank account only. So if the bank account has been opened post a year of comfort, any year, it can be 2014, 16, 17. Now, for those accounts, why do you need to do a KYC? So I think very simple inclusion stuff. If you suddenly say that, okay, anyone who has opened a bank account after 2014 is now a walk-in investor into mutual funds. That itself, I think, will create a lot of inclusion into our market. I think all of us here are primarily concerned about this unique investors moving up, right? And I think just by imbibing all the Jan Dhan post accounts for non-KYC can move this fulcrum from 5 crores to 55 crores literally overnight.
Thank you. My next question is also to you, Shomo. Regulation must balance between innovation and investor protection. How is SEBI enabling fintechs and AMCs to innovate responsibly while ensuring that the small investor is not overwhelmed?
First, get the small investor, then think of overwhelming them. You have no small investor in the market, in our industry at least. So I'm being very candid, unfortunately. Just look at this. Gujarat is a state which is known for its acumen in share market. Every other guy talks about share market. What is the population of Gujarat? Can anyone help me? Huh? About 7 crores, correct. So just look at this. Just a state of Gujarat had 7 crore people. About 3.5 crore people live in Greater Bombay and NCR. You know, what are we talking about? A guy in Bombay who has to survive, even if a buy in Bombay makes 50,000 rupees a month. An auto driver makes more than that. You have not been able to convert the 4 crore Bombay dwellers also into mutual funds. आप क्या B30, B40 का बात कर रहे हो? So what I'm trying to say is pretty simple. You know, as an industry, I think we have done enough of fund management talk, too much of CIO talk over the last 30 years. This industry has only spoken about these IIT, IIM CIOs, and they have done a wonderful job. We are surviving, we are sitting here because of the fund managers have delivered humongous returns. But I think on the marketing side, we have done a horrible job. We have only been talking about this 20% and 18% and how sustainable it is, what impact and how this will go down and all that. As an industry, we have not been able to tell a country like India that instead of buying gold ornaments, you can also do a gold fund. You know, that's our marketing skill has been. Last 10 years, gold as an asset class has given more than almost equity as a return. But how much of gold sitting here we have sold? Ask yourself. I myself have not sold. Because gold came to me just like an ETF ki 5 paisa milega, kyun bechenge? Correct? So I think, you know, only if we are looking at mutual fund as an equity alternative, we will continue to go around the the CIO narrative. We will go around markets going up and markets going down, and we will not be able to provide the en masse, the 100 crore Indians, keeping aside that 40, 50 crores doesn't really matter. There are 25 crore shelters in India. There's 25 crore families where we want to take mutual funds to, and they are looking at solutions. They are not looking at market and volatility. They don't want to understand what Trump will do and how the markets will affect by that. We are trying to tell that story to them. I don't know why we are doing that, because the entire 30 lakh life insurance agents don't do that. Incidentally, they desell us. If I talk to some of my life insurance friends, say that they actually tell that कौन माथा पीछी करेगा तुम्हारे जैसा, हर 3 महीना में कौन ज्ञान देगा कस्टमर को, किस लिए मेरा एनए भी नीचे आ गया, मेरे को करना ही नहीं है ये सब. मेरे को तो एक बंदे को बोलना है, भाई तुम्हारा बच्चे को लिए पैसे जमाना है ना, 18 साल में तुमको 50 लाख रुपया मिलेगा, ये चालू कर दो, बस ले लो, खत्म. 1 लाख का मैं चेक लेके आता हूँ, 30,000 मेरे पास. Who will do what you are doing? You are nonsense. So that's what, guys, you know, that's my thought. I may be sounding a little indifferent, a little different to what people have been saying since morning. Everything is good about everything. But I'm just saying that, you know, I think, you know, it's high time this kind of a conference should make us think that how can we move the fulcrum from 5 to 25 and not from 5 to 6 and pat ourselves for a 20% growth.
Excellent, excellent. I mean, of course, I mean, we, that's what I said in the beginning. We saved the best for last. And, you know, we definitely need such candid opinion. It genuinely helps customers, investors to take the right path. So, Arindam, my last question to you. From your side, how do you think AMCs can constructively collaborate with SEBI and AMFI to simplify product disclosures, reduce jargons, and make onboarding frictionless for new to market investors?
See, this is very simple. As Shomojita said, Jandhan account is one of the things. I think KYC is one of the main issues. We face it every day. It's a complicated process. And if you go to the leave about the individuals, if you are looking at a corporate level, it is more complicated. When we are doing repeated KYCs, I think the regulator should come and do a unified KYC with either the RBI. They're equally good KYC norms are there in the bank. And I think working in across the bank financial sector, I think banking is one of the well-regulated, well-managed financial institutions. In banking, mutual fund, insurance, every industry I've worked with, I think banking is the most. We can take a cognizance of their KYC and obviously putting into those small accounts, and whatever the KYC norm should be little simplified. Again, one button investments have to be there, SIP investments have to be there, and empowering people to have that convenience of uploading document and digitization. We are still doing form filling up. We just are into an NFO. We are still doing form filling up. I am being selling mutual funds from 2002. Currently, we are still into the same mode of filling up forms and sending it to the camps at Karbi. That thing is not changed. We are talking about AI, we are talking about disruption, we are talking about jobs going on. My people are still filling up forms in the AMC. There's no job going on. I need more people to fill up forms. And if the AI does it, I'm very happy. I think the gentleman is sitting here. If you can do something like that, I need little less people as you have done so. But no job is going out here. If the regulator has to change, it has to be AI driven. It has to be more easier for both the part, for the investor as well as for the people who are making them invest, the IFAs and the other institutions like banks. It is that I should request to the regulators to obviously get into and look into it, how that can be AI, banks and the SEBI as a regulator can sit together and make something like they have done, spend so much of money in mutual funds. Sahi hai. Obviously, this sort of a corpus moving into this sort of an ideology, I think simpler for AMCs, simpler for the customers, simpler for the distributors. I think that will bring this, whatever we are looking at in the growth of India, in the growth of the AUM, in the growth of the mutual fund industry, I think that will contribute a lot.
I think on a lighter note, what came out from the whole day's conference, the agency for mutual fund Sahi Hai needs to be really think through and come out with a better script. Thank you, gentlemen, for your thoughtful and grounded insights. What we realize that to reach to smaller cities, we need policies. We need, SEBI, AMFI to come up. The AMCs need to think through. Only then the long-term trust would be built. So from regulation to real-time nudges, from grassroots partnership to digital bridges, the future of investing in Bharat is being built one step at a time. Thank you, ladies and gentlemen. You have been an excellent audience. I can't believe after lunch we had such a large number. And I think my panelists deserves a much louder round of applause. They have been absolutely par excellence. Thank you very much. Yeah, sure. Yes, ma'am. Kindly introduce yourself and be brief.
Okay. My name is CMA Sutapare. I'm basically a SAP FSA consultant. So my question is actually, Mr. Shomojit was telling that LIC, I mean, MFs also, they can go ahead with the approach like a retirement fund or like marriage or like a children's education. So my question actually, I have a small doubt in my mind that because they have a fixed return, but can MF, whatever my knowledge goes, MF or mutual fund, they can't, fund managers, they can't guarantee such a return. So how can I address that problem?
So first and foremost, there are certain guaranteed products like banks, like LICs, insurance policies. Now, mutual fund should not walk that path. Mutual fund can give guarantees also, but I don't think mutual fund needs to do that. Gold as an investment do not give you a guarantee, right? But why do you invest in gold? Because you know that gold over a long period of time will preserve your wealth and will grow at 7-8%. But last 10 years have been phenomenal. But there are investments people will make not only because they will give guaranteed returns. Because as a country, म्यूचुअल फंड सही है को अगर एक चीज बोलना था ना 10 साल में, उसको ये बोलना था कि guaranteed returns are the lowest possible returns. Because no guy who is guaranteeing a return and he knows that I can make anything between 7 and 9, he has to be a big fool to give you 7. He will only give you 6. Correct? So guaranteed return, just because it is there, you will buy a product and there is no guaranteed return, yet that product has given 17% CAGR over the last 30 years, you will not buy that product, so be it, no problem. So as a mutual fund industry, I think we should be very proud of what as an industry we have achieved. Now the question is, how do we take this? Guaranteeing a return is not what we should do. What we should try and do to clients is to tell them that if you have a solution to achieve, mutual fund is the only product. Because what life insurance is supposed to do is to cover the risk in case something happens to you. Life insurance is not supposed to provide the solution to you, which is a 15% CAGR growth for you to achieve 50 lakhs when your daughter will be 20. Sorry, it can't do that. For the same thing, for life insurance to achieve, you have to give almost 3 times more money per year. So life insurance was supposed to manage your death risk. Mutual fund was supposed to give you the returns. Unfortunately, today life insurance is trying to do both, and mutual fund is doing neither. Okay.
So, I mean, thank you so much. If I may also add, I think one of the previous speakers made a very valid comment. Not taking risk is the biggest risk. Okay, that is one. Second, ma'am, please also judge. Most of the promised guaranteed return schemes of life insurance schemes are not actually guaranteed. Okay, and I think what Shomo very clearly said, insurance is protection, mutual fund is wealth building. Okay, this is apple and orange, two different aspects completely. Yes, gentleman in white shirt.
Good afternoon, sir. Do we feel that mutual fund seller should disclose the risk to the common people?
Arindam?
Hello. Yes, he should. He should. See, there is a nuances of everything. The risk and returns are hand in hand. So in mutual funds, as ma'am was also saying, I can also say, insurance, yes, for your life, it is something which has a guaranteed return. Again, fixed deposit is a guaranteed return. Mutual fund comes with a risk. Obviously, if you are telling you go to bank, you get a 6%, which is guaranteed. You come to mutual fund, take a 12% guaranteed. It's not the correct way of comparing it. Risk has to be told, risk has to be explained in a proper way. And as we know, diversification and long-term investment, as we say, goal-based investment, long-term investment reduces risk. The only way I found out risk to be reduced is only through diversification. And that's why we put our eggs in different baskets. So we have an FD, we have a maybe a insurance, we have a mutual fund, we have other asset classes like gold. So all the assets will be there. But yes, risk has to be told. See, risk, if you don't tell the client, there's somebody else who will tell it. And he will tell in a different way, which is actually the risk which is there in the asset class. And that is what is happening. Somebody who comes and takes a chit fund, again compares it with a mutual fund, and then because it's much more riskier. And let me tell you, chit fund is also regulated by the RBI. These are not chit fund, they're fraud funds. And they compare it and pitch it to them. But if you explain what is the risk of a mutual fund, what are the nuances of a mutual fund, he will immediately say, this is not a mutual fund, sir. I will not invest to that person. And he will give it to you. And thank you for explaining him and obviously saving him from investing into a wrong product.
Right. Okay.
Hello, sir. I don't have a question. I just have a feeling and a view. Once you started this session, you said this is an important session, so we kept it post-lunch. And we started with SEBI guys. Now, historically, we are listening SEBI guys. I think pattern should be reversed. These guys are saying the facts. The SEBI and MFI people should actually listen this and understand this and, try to change their think tanks. I mean, this is something,
Shaitan, message for you.
what you are giving us for 30 years, we got bored now. And these savvy guys should learn from the real market and what people are doing on the ground and change the things to work to grow further. Thank you.
Okay. Message for the team. Okay, I think there are no more questions. Shantan, over to you. Thank you. Thank you. Thank you, ladies and gentlemen. Thank you once again, ICC and Team BFSI, for inviting me and involving me for this, important
Pallavi?
summit.
Okay, we'll end this session, very good session. And I'll keep your suggestion in mind, sir, which session to keep in the first and, how to reschedule probably in the next edition. And I'm very happy for these people because, he turns out to be a junior from my school. Anindoda has been a mentor, a guide, and he's one person who has, with ICC BFSI, he has drove this conference. He has been a fantastic help and support. And of course, Arindam came in at the last moment. Thank you so much. So, sir, please felicitate your fellow panelists. Can we have a group photo, please? May I request Mr. Pal Chaudhary to kindly stay on the stage, and I'll request Sri Chittaranjan Chattopadhyay, Chairman of BFSI Cost Institute, to kindly come. We'd like to felicitate you, sir. Pallavi. Please, sir, please. All yours.
Thank you. It's a great session I attended. In fact, I think every program be finished with some, conclusory, remarks from someone. So I am a participant today. I just want to tell you whatever I have made a gist of the whole sessions what I have attended. Mutual fund itself is the one. M stands for managed by experts. What I have learned. U stands for understanding risk and return. T stands for tailored to investors' need. U stands for unlocking wealth creation. And A stands for affordable and accessible. And then L stands for long-term wealth building. This is your mutual. When you are going to invest your fund, that financial discipline F, then your understanding market dynamics, then navigating your market volatility, and then this stands for your diversified portfolio. I think this is the takeaway from the today's session. Thank you.
Please accept our humble gift. Chittaranjan sir has always been a wonderful person. Whenever we call him, if he is around in Calcutta, he has always supported us, visited us. No, sir, it was a pleasure hearing you. You heard all the claps, right? Thank you so much. Now we come to a very interesting last activity from the stage, that is the lucky draw. Can we have the bowl, please? Onindo sir, please come and pick one. Okay, we got our first winner. We have got 10 lucky draw prizes. And the first number is a hit number. A person who has come a little late, it's 100 plus. So any guess? 100? You are very close, sir. It is 121. Who has got 121? Please come, sir. Gautamda, don't get so excited. Please sit down. You, Aika will get many prizes, I know. Last year also you got many prizes. Please show me your coupon, sir. Okay, validated. আপনি দুটো তিনটে 10টা গিফট আছে and this person has come very early. A number between 1 to 20. 1, no sir. No, sorry, no ma'am. It's okay, it's between 10 to 20. In between 14 to number 14. Congratulations, sir. Can you please tell your name when you're getting the award?
My name is Ritubroto Vishwas. I am from SBI Mutual Fund.
Thank you, sir. Please come. Sir, one more for you. Okay, it's again a two-digit number between 40 and 60. 40 and 60, two-digit number. Ma'am, why are you so close every time you miss it by one? It is 52. 52. सर आप आराम से आइए, कोई जल्दी नहीं है. हम लोग को 5 बजे हॉल छोड़ना है. স্যার আসুন, আপনার নাম বলুন, কোথা থেকে আসছেন? এই যে মাইক.
My name is Pravir Kumar Datta. I am the Vice Chairman of Srirampur Hugli chapter of ICMI.
ICMI, great sir. Sir, একটু স্যার স্যার এইটাই. Thank you, Anindoda. Now may I call up on stage Shomojit to do us the honors. Uh, 100 to 120. Any number in between that. In between 100 and 120. 1? Okay, 110 to 120. Huh? Now you're right. Please come. That's your number? Great. Yeah, its name is also written at the back. Third time lucky. That's what they tell, right? Ma'am, number. Thank you. In fact, ma'am, you should thank Shobhajit. Shobhajit first picked up a number, then he picked up another number. I don't know. He's even doing it.
এখানে অনেকের নাম লেখা নেই পেছনে।